As of now, we've hit 6 quarters of consistent record-breaking revenues, all while being profitable.
Welcome back to LukeTheTrader, and this time with Adam Zaghloul. And my first and usual question to your company would be essentially, why should investors be interested at the current moment in NTG Clarity Systems? And could you just introduce yourself a little bit? And that's it for now.
Yeah, hi, Lucas. Pleasure to be here. Thank you for having me. My name is Adam Zaghloul. I'm the Vice President, Strategy and Planning for NTG Clarity. And you asked, why should investors be interested in NTG Clarity right now? I think the answer really is, we're in the digital transformation business, and that industry is seeing rapid growth right now all over the world. So it's estimated in 2023 to be a $1 trillion market, growing at about a 20% compounded annual rate to be $7 trillion in the next decade. A large part of that growth is coming out of our main market, which is the Middle East, specifically Saudi Arabia, where 80% of our revenue comes from. They're seeing a growth rate closer to 30% a year. So all of that growth means that NTG Clarity is set up for a lot of new business in the digital transformation world. Specifically in Saudi Arabia, they have an economic development plan called Vision 2030, where the idea is to diversify Saudi Arabia's economy away from traditional oil and gas and more towards, well, they're making investments in all sorts of areas. They want to be a financial hub for the region. They're investing in infrastructure, sports and entertainment, and tourism. You probably see that stuff all over the news. But behind all of, yeah, exactly, the line, all of these big infrastructure projects. But behind all of those headlines is, digital transformation infrastructure that's needed to support all the development and enable it. So with a few decades of experience in the region, NTG Clarity has been in business for more than 30 years now. We're in a strong position to get in on a lot of the growth in the digital transformation world in Saudi Arabia. So we're seeing that in revenue growth. When we released our Q1 just a little while back, we saw 90%, more than 90% revenue growth compared to the prior year. When we released our 2023 annual report, it was 57% year over year growth, and 2022 was close to 50% as well. So we're seeing a lot of increased business coming out of the digital transformation efforts in the Middle East.
Mm-hmm. And just for any prospective investors out there, could you just explain your business model and the sectors you're in?
Yeah, for sure. So we are, like I mentioned, in the digital transformation business. That breaks down into probably two categories of business. One is the biggest one. It makes up about 90% of our revenue. It is outsourced software development services. So basically, when one of our customers, typically an enterprise, financial institution, telecommunications company, government organization, they basically have software projects that they want to build, but they need the expertise and they need the manpower to actually build out the software. So NTG will contract out employees to work for these customers and build their software for them. It can be teams of any size, one developer, all the way up to an entire department, software developers, solutions architects, UI designers, project managers, product managers, everybody who's involved in software development, we can help our customers staff. And they can work either on site at our customers' offices or offshore from our offshore center in Egypt. We have 3 offices in Cairo, Egypt now that house offshore developers. So that's the primary line of business. The secondary one is the remaining 10% of our revenue, which is proprietary software products. So NTG Apps is our flagship software product, which is really a digital transformation platform that helps businesses develop and deploy enterprise applications for their day-to-day operations, anything from a full-scale ERP system, enterprise resource planning, all the way down to more niche, telecom-specific engineering platforms or IT support systems for use in individual departments. NTG Apps can help with that as well. So that's the breakdown of our business.
As you already started sort of talking about the revenues, what can NTG Clarity do to continue that revenue growth over the coming years?
Yeah, for sure. I would say the number one priority is definitely just focusing on the growth that's happening in the Middle East right now. So I mentioned Vision 2030 in Saudi Arabia. There's still 6 more years to go on that economic development plan. So our number one priority is, putting more boots on the ground to get into the enterprises that are growing, snatch up as much of that new business in the digital transformation world as we possibly can. So I would say focus is the number one thing on the growing market in the Kingdom of Saudi Arabia and the Gulf more generally.
Mm-hmm. And how do you plan to sort of navigate this geopolitical landscape and uncertainty in the Middle East?
Yeah, for sure. So there's definitely a lot of news about instability and uncertainty in the Middle East right now. I would start on, our revenue side, our customers primarily in Saudi Arabia. It looks like, contrary to, I guess, the stereotype, there will be a lot of stability and certainty, at least for the next few years in that market. Saudi Arabia is really investing in, putting forward the message that they're open for business and they're open for investment and they want to attract business there. So we really don't see a lot of instability or uncertainty in Saudi Arabia specifically over the next few years. So that's the first side of things. On the other side of the coin, where we house a lot of our developers and offshore uh, offshore service providers in Egypt, there is a lot of economic uh, uncertainty in Egypt right now, specifically around the currency devaluation. That's a big news item recently, the Egyptian pound being devalued, and it's definitely been very hard on a lot of the people who are living in Egypt. But NTG is able to stay open, provide jobs in Egypt and provide soft skills and hard skills development for the people who are living in Egypt and working for us by basically hiring Egyptians and having them work offshore for our customers who are in the Gulf and worldwide. So we're effectively able to pay our expenses in this devaluing currency and collect in stronger currencies like the Saudi riyal that's pegged to the US dollar and stay open and keep the economy going at least as much as we can in Egypt during basically hedging the Egyptian pound devaluation and making the best of a bad currency situation.
And this is essentially how you're planning to sort of use the real in Saudi Arabia to essentially just fight against the currency devaluation in Egypt and sort of turn this rather negative point, which has been there for NTG Clarity systems for the past few quarters, to turn it into a good thing,
Yeah,
right?
exactly. So we're basically hedging the Egyptian pound by collecting in stronger currencies like the real. And if we're working with customers in Egypt, trying to get the contracts written up in US dollar terms, for example, so that we can hedge the Egyptian pound situation. Yeah.
Mhm. And can you sort of talk a little bit about your margins and the recurring revenue within your business?
Yeah, for sure. I can start with recurring revenue. So we define recurring revenue as, a customer has a contract with us, typically year to year, and when the contract has expired, they renew the contract with us. So after a year of working with us, they renew it. So by that definition, we have about 50% recurring revenue right now, um, which I think is pretty strong, and it only stands to grow as we continue to grow as well. On the margin point, so we typically put out guidance for our top line revenue as well as our bottom line net income margin. So for 2024, we're targeting $50 million of top line revenue, which is about an 80% increase over 2023, with a 10% bottom line. When it comes to gross margins, when you're asking about, we don't typically give strong guidance on that because it has historically been lumpy quarter to quarter. Historically, it's been in the high 30% to low 40%. I think what generally brings up this question is in the end of 2023, with our year end report, we released a margin that some investors probably saw to be lower than expected, probably closer to 33% for the year. And our gross margins are lumpy because there are a lot of factors that play with them. So the primary ones are going to be just our mix of work. So whether we're doing, a software license or software implementation project for a customer, those typically have a little bit higher of a margin versus our more usual bread and butter outsourced contracts. So just the mix of the different types of revenue that we're seeing impacts the gross margin. But also, we're growing fast, so we typically offer promotional periods and discounts for our customers to secure new work. And then once we secure that new work, it's not uncommon to hire and onboard more higher cost contractors to, fill the seats in the meantime so we can actually, fulfill the contracts that we've been winning with all this fast growth. But that seemed to be localized. All those three things hit us in the end of 2023. And when we released Q1 a little while ago, things seemed to stable out more. Promotional periods expired and customers started paying full price. We onboarded a lot of those contractors to be full-time employees, and the margins came back more in line with what we were expecting. So all that is to say, we try to not get too bogged down in the weeds, and we want to focus on our main goals, which is that 50 million top line with a 10% net income margin.
Mhm. And how much room is there for NTG Clarity Systems to improve their margins and potentially just moving out so a little bit, at least the lumpiness of the revenues?
Yeah, like I said, I think the margins are in a pretty good spot. I mean, when we released our Q1 results, it ended up being a closer to a 15 or 17% bottom line, which is really exciting and really good news. So there's definitely a potential for improvement. But just like I said, due to the nature of our business, the difference in types of contracts versus how we're fulfilling them leads to an inherent, lumpiness in the margins. But I guess my advice would say we're still targeting that 10% bottom line, even though uh, the first quarter results are looking really hopeful, and we hope that our investors will ride out the bumps and keep their eyes on the prize, which is our annual projections, which are looking to look really good.
Hmm. And within sort of your financials, how are you planning to keep operating costs in bay as they sort of grew faster than the revenues?
Right.
I mean,
So
the operating cost, just for a little bit more information, the operating cost grew by 142%, if I
mm,
recall correctly, and the revenues by 92%. Sorry for
yeah,
interrupting.
no problem. So yeah, I know what you're talking about. That was Q1 2024. We definitely saw operating costs grow faster than revenue for that one quarter. But looking back historically, that definitely hasn't been a trend, which is a good sign. So if you look back through all of our reporting in 2022 and 2023 and years prior, we haven't had operating costs blow out to the same extent that we did in Q1, and we don't intend for that to be the trend going into the future for sure. What did happen in Q1 is we saw a couple of factors hit our operating costs that are basically us setting ourselves up to continue to take advantage of the growth that we've been seeing. So we've put a lot more salesmen on the ground to sell to the enterprises that are growing in the Gulf region. We went to quite a few trade shows and conferences and brought a bigger sales team with us as well. So there's a lot of travel and sales salaries and expenses that go into the operating costs. On the more general and administrative side, hiring employees that are currently undergoing training to eventually be placed with our customers played into the G&A a lot, as well as finally seeing full quarters with the expenses associated with the new office that we opened up in Egypt as of last year. So all of these expenses sort of hit us in Q1 there, and we definitely expect to grow into them and not see the same kind of faster than revenue growth in operating expenses that we saw in Q1 going forward. So hopefully, we're expecting it to be a more one-time event.
Hmm. And one user asked online, when does management who owned shares in NCI will begin trading them? And also, does NTG Clarity Systems, I mean networks, uh, issue more shares like a private placement in the future or some sort of financing to grow the business?
That's a good question. So to start on uh, trading by management, trading by insiders, that's a good question. So on the buy side, we definitely have a lot of insider ownership already. So if you look at the float right now, 45% of the shares outstanding is owned by management.
Mm-hmm.
So management has bought in a tremendous amount already. Looking on the selling side, that's where it gets more personal. Like selling shares is definitely a personal financial decision by each individual management uh, person, right? But there hasn't been a lot of selling in the history right now either. But that's
Mm-hmm.
primarily because even with all the growth that we've seen recently, the shares up probably 5 or 6 times since the beginning of the year. Management still thinks there's a lot of room to grow, right? We're targeting 50 million in revenue with 5 million in bottom line profit for this year, and we're still at a
Mm-hmm.
$30 million market cap. The consensus definitely is that we are undervalued for sure. So waiting for a little bit more of a re-rate is definitely on management's mind before selling any shares. That being said, I definitely want to take the opportunity. I know there's a lot of fear in the microcap world, especially about seeing management sell shares, but it's very important to recognize that shares and stock options are a big part of management compensation, especially for companies of our size. So
Mm-hmm.
management have bills to pay just like everybody else, and selling shares is often
Yeah.
a necessary part of just living life, right? So management
It
is,
can be one of many factors. Yeah.
yeah, exactly. And when management owns 45% of the shares outstanding, definitely if any selling were to be taking place, it's important to take a look at what proportion of the shares are being sold to decide, is it something to worry about, or is it just, management has to pay their bills just like everybody else? So to answer your question about private placements and fundraising and financing, so thankfully NTG is in a position right now where we're able to fund our operations and our growth with the proceeds from our operations. We're a profitable company and we have been for several years. So there's no situation where we want to raise money just to keep the lights on, for example. And management is heavily bought into the company, with 45% of the shares outstanding being owned by management. So it's not in management's best interests or in the best interests of the shareholders to go and do any sort of dilutive fundraising for no reason. That being said, at the same time, there is a lot of fear in the microcap world, I know, about share dilution and fundraising. But I have to say that our position is that if the right partner were to come along and offer us funding to accelerate our growth organically in our existing markets, or perhaps to fund a few years down the line some projects to diversify and expand our business into new markets, new geographies, we'd definitely be open to fundraising if we think that the returns from the investment would justify the dilution that we'd see in the stock. So long story short, there are no conversations right now to engage in any sort of fundraising or dilution, but we're open to it if there's a return on investment for sure.
Mhm. And as we are sort of at the end of our interview, do you have any last remarks or anything you want to perhaps highlight about NTG Clarity?
Yeah, for sure. I think we covered a lot of good ground. So all I'd leave us with is, I think NTG really is a rare find in the microcap world. We're a business with 30 years of experience. We're seeing tremendous revenue growth. Like I mentioned, we're targeting $50 million this year, top line revenue, which will be, about 80% increase over 2023, which was itself 57% increase over 2022, which was itself, close to 50% over 2021. So we've got years of consistent growth behind us, and we're doing all of that while being consistently profitable, right? So we're targeting a 10% bottom line for 2024, but we've been consistently profitable for more than 3 years now. And as of now, we've hit 6 quarters of consistent record-breaking revenues, all while being profitable. So I guess all that is to say, NTG is an established company. We're growing fast. We're in it for the long haul, and management's heavily invested. So I think it's something that's hard to find in the microcap world.